Morning, everyone. It's 8:45 on Friday, and this is your pre-opening comment, and it's video number 450. And please hit that subscribe button if you like the work. Okay, so the news is overwhelmingly bad. The Trumps evidently have tested positive for COVID-19. Now we'll see exactly how he reacts to it. Old and overweight are definitely two issues that have proven to be negative. But frankly, the only thing more disruptive would be a change in power. Okay, so Asia and Europe were both down on the COVID news here, although there's no shortage of bad news in Europe for COVID. We have major new high numbers in France. We have a surge in Italy. We have a surge in Spain. So things are definitely not as good as they seemed to be. On the jobs number, we had an increase of only 611,000. That was well below expectations. And to drill down a little, private was up 877,000. So state and government were obviously lower substantially than they looked like. The unemployment number fell to 7.9 versus 8.2 expected and 8.4 last month. The participation rate has fallen again from 61.7 to 61.4. And so we generally, this is generally a bad report. And hourly earnings were up 0.1%. What's disturbing about this is the fact that with the participation rate down and the unemployment rate down, it shows that people are leaving the search for jobs. And frankly, nothing speaks more directly to the need for both relief and some sort of fiscal responsibility here. Okay, Lennar doubled their dividend. Stock is unchanged. Twilio sales up. Guidance, and for Q3, they're substantial. Activision Blizzard is delaying World of Warfare. I don't know that that really means anything. United Health's malware problem is fixed. But the housing market has some problems. As far as mortgages, new forbearance, participation in forbearance programs up 21,000 in the last month, which means that we have roughly 3.6 million mortgages in forbearance. And the biggest area that has added to that are FHA and VAs. And the problem with that is that those are probably the people who are least able to come out of that forbearance. Futures are substantially down. The Dow is now down 450. Interest rates are falling slightly. So we have a Dow down 470 now. We have the S&P down about 54, and the NASDAQ is down 257. So those are pretty ugly numbers. The oil complex is again lower. This chart on the screen is nat gas. And I was looking for a bounce here that we got, but the fact is we had no follow through whatsoever yesterday, and we're lower this morning. The rest of the complex looks just as bad, with crude down back below yesterday's low and looking like it's definitely falling out of this consolidation. Could not get through that 42 level, which is where we had, topped out before, had the break, had the rally to a lower high, and now breaking prospectively to a lower low. It's really difficult for oil to be up when you have the driving season over, no need for heating oil, and no need for nat gas. So when the distillates are weak, pretty much the oil has to be weak. Gold down 320 after yesterday's rise. The silver is following in the same direction, and but we are getting a little bit of a bounce. This is the gold. This is a fairly disturbing looking pattern because we came down, and now, just like with the oil, we have so far come to a lower high. If we were to break to the downside below maybe yesterday's low, certainly Wednesday's low, a close below Wednesday's close, which was 1895 and a half, would spell trouble for this one too. And a chart I showed you last night, which is also in the metals, Dr. Copper, which actually is up a little, but it's hard to know whether it's up a little for any fundamental reason or it just got so oversold that it had to bounce here a little. But it's pretty well supported in this 280 area, but I certainly wouldn't be trading it yet. All right, everyone, be careful out there. It's going to be a rough day, and definitely heavily news oriented. I'll be back if I have anything during the day. If not, have a great weekend, and don't forget to hit the subscribe button.